All right, let's look at cost flows in the manufacturing environment. There's really three broad groupings of costs, so expenses and inventory accounts. And they relate to the activity related to basic raw materials, the production activities, and the sales activities. And we're going to start with the materials activity. So you need ingredients. If you're making something, if we're in manufacturing, we need some raw materials. So unless it's the very first year of the business, they've got some beginning balance of raw materials inventory, and then over the course of the period, they might be making some purchases, and then that provides the basis for all of the materials they could possibly use that period. And either they're going to transfer some of those into the production environment, right? That's the added to manufacturing category, or some will remain as part of the ending balance of raw materials inventory. When we get to production activity, we have to start thinking about work that may have been in process at the end of the prior period. So there may be a beginning balance of work in process, or WIP inventory. Then we add to that the raw materials that we sort of requisition from the storeroom and send to the production floor. So we're adding more ingredients. We may be finishing the beginning work in process. Then we're starting new output. And then we apply to that the direct labor costs. And then we apply to that the factory overhead costs. And the sum of all of the beginning work in process and the current costs for materials, labor, and overhead gives us the total manufacturing costs for the period. Well, where might those total manufacturing costs go after that? Well, some are going to be completed. Probably those beginning WIP units are completed first, and then there'll be some units that are started and completed in the current period, and then there may be some that are unfinished at the end of the period and remain in an ending balance of work in process inventory. So total manufacturing costs get split into two broad categories. The ones that are finished go to finished goods, and the ones that are unfinished remain in a work in process account. So those finished goods, they end up in one of two places as well, right? So there may be some beginning balance of finished goods inventory, things sitting in the warehouse waiting to be shipped out, plus the current goods manufactured, right, the cost of the finished goods that were produced in the current period, and that gives us the goods available for sale, and goods available for sale either end up in cost of goods sold or they end up in the ending balance for finished goods inventory. So instead of looking at this slide after slide after slide, I think it would be helpful to sort of do a recap because it is somewhat of a cycle. You have materials. Some will end up at the end of the period in the ending balance of raw materials inventory. Others will be transferred to production. You've got production costs, so beginning WIP, plus the materials, direct materials, plus the direct labor, plus the overhead. That gives you total manufacturing costs, which the finished product goes to finished goods. You have beginning balance of finished goods plus the costs of good manufactured this period. That gives you your goods available for sale. And either those units get sold and become part of cost of goods sold, or they remain in the warehouse as the ending balance of finished goods. And the cost of goods sold, that's product that was sold, and that generates cash so that we can go out and buy more materials, and the process starts all over again.